So in this video, I'm going to explain how to complete the handout from Chapter 1. So in Chapter 1, we talk about taxes and stock trading. So here I have a couple examples, and what we need to understand that is when you trade stocks, they have capital gains, and the capital gains are the difference between the price you buy the stock at and then the price you sell the stock at. So if you hold the stock over 12 months, if you own the stock for greater than a year and your tax bracket is 15% or lower, you are only going to pay a 5% tax on your capital gains. If you own the stock for more than 12 months and your tax bracket is greater than 15%, you're going to pay 15% tax on your capital gains. Now, if you own the stock in a short-term period, you're going to pay your marginal tax bracket. So your top tax bracket is what you're going to pay. You're going to get no benefits if you sell your stocks with less than a year. So the government is trying to promote people to own stocks for longer term, not short term. So short term trading gets taxed at the full tax rate. Long term trading gets taxed at a discount. So it's a better strategy tax wise for investors to hold on to their stocks longer. So let's look at the first example. This is the first example. And you buy 100 shares of IBM on May 1st, 2003 for $100 a share. And then you sell 100 shares of IBM on July 7th, 2004. So the first question you want to ask is have you owned the stock for a full year? And yes, you've owned the stock here for 14 months. So that's greater than 12 months. So you're going to qualify for a discount. But what discount do you get? Well, since you're in a 28% tax bracket and it's over 15%, you're going to get the 15% tax rate, which is good. So instead of paying the 28%, I'm going to actually only pay the 15%. So let's calculate my profit. So my profit here would be the $115 I sold the stock for minus my purchase price times the amount of my shares that I purchased. So, let's see, that is not right. Oh, I know why. I got to do little order of operations here. Please excuse my dear Aunt Sally. That's better. Okay, so I made $1,500 profit on the stock transaction. So my taxes are going to be the $1,500 times 15%, because in the 28% tax bracket, which is higher than 15%, so I qualify for the 15% capital gains rate. So that would be my taxes here. Let's move on to the second example. I buy 100 shares of IBM on April 4th, 2003, and then I sell 100 shares of IBM on July 7th, 2004. So is this first question, is this a full year? Yes, it's over a year, over 12 months. Okay, so I'm in the 15% tax bracket, which means my tax bracket is equal or less than the 15%, so I'm going to qualify here for a 5% deduction. So let me calculate my profits, and I'm just going to use the same formula from here. So I made, let's see, no, that copied I didn't want to copy the number, I want to copy the formula. Okay, better. So I made $35 a share times 100 shares. My profit is $3,500. So I'm going to pay only 5% on this because of the fact that I have my tax bracket is low, so I qualify for the lower rate. And you see here where I made a lot more profits than in example 1, but I'm paying less taxes because of my overall lower profit margin. Now let's look at the third example. In the third example here, you'll see that I bought 100 shares on February 5th, 2004, and I sold 100 shares on May 5th, 2004. So is this short-term or long-term? This is short-term because it's less than 12 months. So if I calculate my profits here, I made $2,500, which is $25 a share times 100 shares. And my taxes, I'm going to have to pay the full tax rate of 28%. Because I don't qualify, it's short term, I don't qualify for any of these discounts. So now you can see here, a profit of $250,000 I'm sorry, $2,500, I'm paying $700 in taxes. Well, here I made much more and only paid $175 in taxes. So this is why we pay attention to taxes and how it can make a big difference in the profits we keep when we're trading. All right, so if we look at the last example here, I buy 100 shares on April 1st, 2004, and I sell 100 shares on on May 10th, 2004. Is this short term or long term? It's a short term. It's only about a month. So I'm not going to qualify for any of the discounts. So once I calculate my profits, which are $1,000, which is I made, $10 per share times 100 shares, and I'm going to have to pay my tax rate because I don't qualify short term. I don't qualify for any discounts. So there's my taxes I owe on this transaction. So now let's look at how taxes are calculated. So here I have two examples. I want you to calculate A, the single income of $75,000. So taxes are decided upon how much you pay taxes on your status. Some people are married, filed jointly. Some people are single. So the first part of this question, I want you to calculate A, single income of $75,000, and the part B would be calculated joint income of $175,000. Now, depending if you're single or joint, you have different tax brackets. These are the tax brackets here, and the rate of tax you pay per bracket. And you can see I copied those tax rates down here as well. So in the first problem, this is basically the first problem here, we want to calculate the taxes on income of $75,000. So the first thing I have to do is figure out, for the first tax bracket, the 10% tax bracket, how much money would fit in this tax bracket here. So it's from 0 to 7,500, so we know that we could put $7,500 worth of income here, and the amount of taxes that we'd pay on this income would be multiplied by the rate for that bracket. So now I would elevate to the next bracket. So I filled up the first bracket at 10%, and since I made more than 7,500, I go into the next tax bracket, the 15%. Now here, how much money is in this bracket? Well, the top end is at $30,000 and it starts at $7,500. So how much money is between $30,650 and $7,500? So do a quick calculation. I'll subtract the $7,500 from the $30,650, and I find that this bracket can hold here. This can hold $23,150. And since I made more than $30,000, this is how much I made. I know that I completely filled that bracket. So again, I'm just going to drop down this formula here, and this is how much taxes I owe. But wait, now I graduate to the next tax bracket, which starts at $30,000 and ends at $74,000. So how much money is in that bracket? So 74,200 minus 30,650 means that the capacity of the third tax bracket is 43,550. Since the bracket ends at 74,000, I know that I can fill it up completely because I've made 75,000. So this, just put that, the amount of taxes I pay at the 25% tax bracket. So now, in the fourth tax bracket, the 28%, I notice that it can hold probably about another $70,000 here, $80,000 capacity here. I'm not sure, but it's a lot. I don't need that much. I only made 75,000, so I only need 800 of this bracket here. So because I made 75,000 in here, I've already accumulated in these three brackets in blue. I've accumulated $74,200 worth of taxes I've paid. I only have to pay the remainder, 800. So you see here that if I add up how I broke my income up into the four tax brackets, these four numbers, 7, 23, 43, and 800, will add up to 75,000. So I've taken my 75,000 and I've broken it up into the four tax brackets, and simply calculated the tax by taking my income here, multiplying it by my tax bracket here, and getting the taxes here. So if I want to know my total taxes paid, I can simply just do a sum of this column here and my total taxes paid is $15,334. So if I want my blended rate, which is an average rate, I just take my taxes paid and I divide by my total income, and my blended rate is 20%. Okay. So now, on the second example, I have, this is a joint return, and the income is $170,000, so I'm going to use the joint tax brackets here, and I'm going to do the same thing. So I'm going to find the capacity of the first bracket is 0 to $15,100, so I know that the capacity is $15,100, and I'm going to do my calculation. I take my income and I multiply it by my tax rate, and that's how much taxes I pay in that first bracket. But I graduate to the second bracket, so I know here I'm going to fill up the second bracket because it stops at 61,000. This goes to 123, so I'm going to definitely be in the third bracket, and it goes up to I'll be in the 28% bracket, but I won't fill it completely because it ends at 188,000. I've only made 170,000, so this is going to be a partial fill. So the first thing I have to do is figure out how much money is in the second bracket. Well, I'm going to take the 61,300 and I'm going to subtract the 15,100. So this would be the capacity of that second bracket. And I'm going to bring my tax calculation down. Now the third bracket, since I'm going to completely fill up the third bracket, I made 170,000 and the third bracket stops at 123. I have to say the 123,700 minus where it's the 61,300 because that's where it starts. So I'm looking for the money, but the amount of money or the number between 61 and 123,000, and that's 62,000. So now the third bracket, I have to figure out how much money can I fit in this third bracket. So I simply start with my 170,000 and I'm going to subtract the 123,000 that this bracket starts at. And this will tell me the amount of money I can fit in this bracket. So I could fit 43,000 in this bracket. So if I add up these four numbers here, if I do a quick sum on these numbers, you'll see that I've allocated the full $170,000 of my taxes in these four numbers here, add up to 170,000. So I've broken up my 170,000 into the four tax brackets under the joint tax brackets. And I stopped at the 28. So my total taxes are going to be $37,000. And to get my blended rate, I'm going to take my $37,000 and divide by my 170, and I get a blended rate of 22%. And that's how to figure out how much tax you owe the government based on your income. Okay, so that's my explanation of how to solve the homework sheet from Chapter 1. And I hope that this helps reinforce what we learned in class. And I'll see you next time.